No, because the lecture's like, Gerard, all I ask from you is only 1 hour a week. I don't ask too much. What? And you still can't give that to me. You still late. So yeah, that's the lecture I get. Yeah. So now it's my time to fry him. You see?
Hi guys, welcome to another episode of AAFS Uncut. And today you have myself, Leonard, as the host, and we have the boss of the office, Elaine joining us. Our in-house economist, Mr. Gerard Tam, our doppelganger of Tony Leung, Mr. Justin Ong, and we have a very special guest, very special guest, which is a self-proclaimed Pokemon master,
Joey Tam.
Joey Tam.
Hey!
So, Joey, you mentioned that you aspire to become a YouTuber one day.
That is true.
You can make a lot of money doing that, Joey.
So
keep doing it.
So Joey did say he wanted to be part of this podcast today because it is your dream of what?
Being on YouTube.
Being on YouTube, being famous. There you go. Here's your 5 minutes of fame.
Hello.
Okay, so you can go sit at the back there now. You can help yourself to Leonard's whiskey and his cigars, and we'll come and get you a bit later, Joey.
Please, not until you turn 18, Joey.
It's okay, you can.
He's going to come back 10 years later. Just make sure you don't change a lot.
Okay, guys, so before we start our topic today, I just want to clarify that on Monday, that I came in on time for the Monday meeting.
Wow.
I just want to make sure that everyone clear about that.
Now, our office structure is as such as we always have a team meeting on Monday at 10 o'clock, and there will be severe penalty for anyone who is late. Anyone who's late. 10 o'clock sharp, you got to be there.
I don't think it's severe.
Leonard came in at 10:01 a.m.
No, I came in at 10
Now,
o'clock.
late is late, then Leonard, doesn't matter you're 1 minute late or 1 hour late, late is late. So the penalty is, I believe, Elaine, that whoever's late has to buy lunch for the team.
Yes, that's correct.
Are we going to enforce this fine?
Yes, of course.
Oh,
In our attempt to reduce our own living expenses.
Elaine very evil. I'm actually okay to let the boss go on this one. How about you, Justin?
I'm not too interested with the lunch part. I just want you to explain a little bit what happened when you are late. I thought when you say the punishment is quite severe, that the lunch bit is the easy part, isn't it?
Justin is being very careful because he's still on probation, you see. So has to be. I've been late before and I've been smashed by Leonard because the lecture's like, Gerard, all I ask from you is only 1 hour a week. I don't ask too much. What? And you still can't give that to me. You still late. So yeah, that's the lecture I get. Yeah. So now it's my time to fry him. You see.
Anyway, for another day.
For another day.
And I don't think I sound that bad as well. You sound like it. I don't think so. Right? Okay, so for today's topic, I want to talk to you guys with regards to the increase of the cash rate. So unless you've been, I think, living under a rock, so yesterday the Reserve Bank has made an announcement that they've increased the cash rate by another 0.5%.
Ouch.
And that will bring the total increase to 1.35%. So I guess yesterday, you guys been discussing this with WMN, with Ivan, and been giving advice to people, right, with regards to what some of the things that they should or should not do. But what I'm curious is, I want to know, in your personal experience, what exactly that you guys are doing to ease the pain of the increase of interest rate. I mean, I can start a little bit, I guess. So, like, for me, definitely cutting out, some of the Uber Eats and sort of doing a prep meal. I think that's some of the things that I've been doing sort of to ease.
Are you sure? Because you know I like to collect rubbish, the 10-cent rubbish from the bins to sort of fund my expenses, and I've seen a few Uber Eats bags in the bin, Leonard.
Well, which they've been cut off.
Starting now.
Starting now, yes.
Or yesterday.
Okay.
Exactly right. Because I'm paying quite a high interest rate because my loan is on a low doc, so I'm paying 3.99. Now with another 0.5% increase, that will bring it to almost like mid 4%. So I'm definitely feeling the pinch as well.
Well, just to keep the example to a more practical explanation, I like to look at the concept of food as well. I mean, I'm a big unit. I eat a lot. I love food. But I've noticed that since the lockdown, before the pre-lockdown, I was eating a lot of takeaway. Too busy, so you just go out and eat all the time. And then with lockdown, just like everyone else, I started to learn to cook. And now that we've got interest rates rise, I can see that the behaviors are already in place. So, I mean, I'll give you an example, yeah? So, for example, we've got 2 dogs at home. So, they love chicken. So, when we feed the dogs, I get 3 or 4 kilos of chicken at once. We boil it up, okay? So, the dog has the chicken, and I keep the chicken stock. So, we use the chicken stock for steamboat. I use the chicken stock to make porridge. And I use the chicken stock to make macaroni, macaroni soup. And, we're starting to eat a lot at home now. We don't go steamboat as much because I make better steamboat at home, and the stocks, is real chicken stock.
Because you gotta spend like an extra $2-3 to buy like a stock from Coles or Woolies.
Yeah. So we're eating a lot more at home, and I mean the other day in office, and this is a true story, guys. We're talking about teriyaki sauce in general, and Leonard goes, back in my time when I was working at Joe's, they left the recipe for the so Leonard actually came across Joe's teriyaki sauce recipe, and me and Elaine were going, oh, do share, because I get teriyaki from the bottle from the shops, and Leonard's going, it's nowhere as good as his recipe. So Leonard made up a couple of jars, for me and Elaine. So I took it back and I tried the teriyaki beef, and it was actually better than the store-bought sauce. So in fact, it's so good that I don't need to actually go out to eat teriyaki beef anymore. I think the teriyaki sauce that you made, I make it better at home, better quality, and it's much, much cheaper as well. So Elaine, you did try teriyaki. Tell us about your other recipe that you did with Leonard sauce.
Yeah, I made teriyaki chicken. I made teriyaki salmon.
Yeah, there you go. And how was the sauce?
Was it successful?
Um,
From what I heard is
you burn it a little bit.
Yeah, I did burn it a little bit.
So don't blame the sauce, you blame the chef.
Absolutely agree.
Well, there you go. How about you, Justin?
Yeah.
I got nothing to say about cooking. I eat all sorts of food, But when you actually ask the question, it's not a response to. It's not actually a response to cut down the cost, but it is with the rising living cost of living.
Correct.
That is an additional incentive for me to continue quitting smoking.
Ooh.
So it has to go anyway. So this is a bad habit. It's bad for your health. It's expensive. It's it doesn't do anything. Doesn't do any good anyway. So by speaking of being practical, 1 pack of cigarette can cost you up to $40. Okay.
So this is the one small pack, right?
Yes. So one small pack of cigarette for 20 cigarettes. That's $30 close to $40 a pack. If you're not a heavy smoker, like I wasn't a heavy smoker, I smoked like maybe 1 pack of cigarette maybe every 3 to 4 days. Okay, so average that's probably two per week. That's $80. That's $320 per month.
Oh, wow.
Correct.
That is
save a lot of money.
That is if I don't drink on the weekend. If I do, as I mentioned to you, right? If I drink on the weekend, I will smoke like a train because I just don't like the taste, just the taste of the beer or the taste of the alcohol.
I understand how you feel.
Much better, but of course, get rid of the bad habit. I haven't been drinking for quite some time. I can't remember how long I stopped for. So this is haven't smoked for a couple of weeks right now. Can't say that it's easy. It's tough, but now you're just giving me more incentive for me to not do that.
So is there, like every time we're in the office, I see you sneak off for like 10-15 minutes, you come back, is there you go smoking?
Not necessarily. Sometimes I just go for a walk and maybe go for sunshine. That's it.
But one thing
because you did mention you can't smell it.
But one thing with Justin is you'd actually I don't actually smell any cigarette.
I fucking agree. Yes.
Does he smell?
I keep wondering like how does he do that?
Man, you're like a cat. You're like a cat that goes and do the poo poo, but you can never. But it's like it's very clean on the cat. You're like a cat when it comes to smoking. Cannot smell you one. But smoking is a very costly habit, I must say.
Oh yeah.
It's costly. I thought about the question why it's costly, it's expensive, it's not good for your health, it's gonna kill you. Well, if you want to kill yourself slowly, it's a good habit to pick up. But they are something something good it does for yourself. That's why the habit is there. It's so addictive.
How about substitute? So in economics we talk about substitution.
Good question.
So you've got you don't have to drive BMW. You can always drive a Mitsubishi, for example. So with cigarette, why can't you replace with alternatives like rollies or even vaping?
Or maybe
I think you want to cut it off altogether.
You don't have to give up your pleasures.
Or maybe food, right? This is something that you guys like, isn't it?
See my face? Give up food. Oh, instant frown. No. You know what?
No, I'm talking about substitute.
Okay.
Replace cigarette with food.
So basically what you're saying is I should give up my fried rice for steamed, tasteless brown rice.
No. Replace the cigarette with the
I actually find it funny for some people when they try to make fun of us. They will say like, "Oh, give this to a bowl of rice."
Yeah.
What's wrong with rice? I love
awesome,
rice. It's awesome.
awesome.
Yeah, but I just eat a lot of rice.
Same.
People eat a bowl, I eat a mountain of rice.
Absolutely.
Yeah. You want to climb. So when I eat my rice, I got to put my mountain climbing equipment and then climb up my bowl of rice and eat it because it's so big. Yeah.
Anyway, moving on to the second question. So I was reading the statement from the Reserve Bank yesterday. So, and one of the points that they made is that they are expecting the inflation to peak by the end of this year, and they're expecting the inflation to go down to their target rate, which is about 2 to 3%, right? So, in your opinion, what do you think of how much the Reserve Bank is going to increase the inflation further this year?
When you say peak, what sort of rates were you looking at when you say inflation peak at the?
So I mean, I'm just let's say comparing it to back in 2008 when inflation was really high. So the Reserve Bank, I think, increased their target rate to about 5 to 7% or something. I can't remember what it was. I just want to see what are your thoughts and see how much more increases that the Reserve Bank is going to make.
Okay, let's just look at this in another context here. So, over the last 9 weeks, the interest rate has gone up by 1.25%. Correct? Over the last 9 weeks.
Correct. Yeah.
Okay.
Yeah.
It's only 9 weeks, man. It's not long, huh?
Yeah.
1.25%. So everyone's complaining. But if you look at just the numbers in isolation, 1.25% is kind of peanuts. Let's put it in another perspective. So let's say if I'm working for Leonard. 1.35. No, 1.35 is the official cash rate. But the rates have gone up by 1.25. So let's say if I'm working for Leonard, I'm a salary man. I'm working for Leonard full time. He pays me a salary. Okay. And Leonard goes, Gerard, you've done such a fantastic job. You work so hard. I'm going to increase your pay. Really? Boss, by how much? 1.25%. I'll be like, is that a joke? No, Gerard, 1.25%. You'd be like, well, that's really nothing, isn't it? It's peanuts, isn't it? So I guess looking at 1.25 and you're looking at interest rates going up by 1.25% over the last 9 months, it's actually not a big jump at all. Okay, it's only a small increase. Now, that's only the last 9 weeks. Now, over the last 2 years, what have we seen? We've seen such an input of money or funds in the economy. So we've got JobKeeper. Okay, so government put a lot of money as JobKeeper for those businesses that were impacted, so they could keep their staff. Then you've got the ATO cash boost, where small business could apply, to get cash grants from the tax office, 10 grand, 20 grand, 50 grand at a time, okay? So trying to keep these businesses afloat. Then you've got the construction grants. There was two in particular. The federal home builder grant, $25,000 for new construction. Then you've got the WA government, even better. That was available to citizens, PR, temporary residents, to every Tom and his dog. Okay, 20 grand there. Then you've got the superannuation withdrawal. Now, if you were an employee if you were a worker, if you were impacted by COVID, you could take out 10 grand at a time. And there were two occasions that you could actually take out 10 grand at each time from your super. Yeah, a lot of people were doing that. Don't forget the home loan repayment deferment. How many customers rang up the bank? Yeah, the bank said, if you're impacted, give us a call. Your home loan, no repayment for 6 months. Okay, and then we just whatever interest we just capitalize after that. A lot of people took that. Okay, then you've got the SME, which is small to medium enterprise. You've got it's called the recovery loans. So small business could apply 50 grand, 100 grand, 250 grand, where they can apply for a non-secured business loan, which was non-secured. They don't have to come up with security because it was backed by the government. A lot of people were applying from that as well. And then the ATO tax deferment, people with tax bill could actually defer, not pay, and not get incurred the general interest charges. So imagine this is only a handful of things that I've just explained. Over the last 2 years, you had all these grants, and the economy just went gangbusters. Yeah, okay. Instead of recession, it just went the other way. So put that into context and look. The last 9 weeks, interest rates has only gone up by 1.25% to try to counter all this activity. Like that is only a small dent that it will play to sort of curb inflation. So unfortunately, given you got the Ukraine issue, okay, the Ukraine war, price of food and price of fuel are increasing, I think there is actually more pain to come.
100%.
But the question is, how much more pain? This is where the crystal ball comes. No one kind of knows. It may go up 2% more by the end of this year, 3%, who knows? When will it stop? It all depends on a lot of other factors that's happening that hasn't happened yet. So
I guess it depends on how much the actual inflation.
Yeah. So just in short, guys, there will be more interest rates to come.
Justin, what are your thoughts?
I was just thinking and visualizing and absorbing all the things you have just mentioned, right? And all these actions, I say increasing interest rate, it's as a key action as a response to the latest inflation rate sitting at 5.1%, right? That figure is a bit of a historical figure, isn't it? So therefore,
it's back in March already.
Back in March. Yep. So therefore, by the end of this month, which is in a few weeks' time, they're going to release one for the June quarter.
Correct.
That would probably have a better reflection of whatever I just mentioned, the increasing fuel prices, the war in Ukraine, and like you say, it's not going to be. There's always a chance that it's not going to be sitting around at 5.1%. It's going to be higher.
Absolutely. So only, like you said, only time can tell. We don't have a crystal ball at this stage.
Well, what's funny is like my partner complained today. Her phone bill just went from, I think, $55 per month to $60 per month. She's like cursing and swearing, but even businesses are starting to pass that cost increase as well. And now at my local Asian supermarket, box of Indomie, $20, now gone up to $22. It's 10% increase, huh? I have to eat Indomie to cut my cost.
Moving on to the next one then. So, Elaine, this is a question for you because you are the person that we go to if we require further pricing for a customer, which we normally do as part of our process. So what we notice is that I think with the pricing for new lending, you can get even further pricing, or even lower pricing. Can you tell us a little bit more about that?
Yeah. So this is what I've noticed. Like maybe within the last 6 months.
Yep.
So what I've noticed is that the bank has been increasing the amount of discount that they are offering for new customers.
Yep. Compared to the existing
compared to the
the
existing
lender.
customer.
When we ask for pricing, they
Yeah.
don't give as much
Yes,
discounts. Yeah.
So
Is it normally one bank in particular, or do you notice other banks sort of trending towards offering higher discounts?
yes, what I noticed is that there are more banks, not just one bank or two. Not gonna say which bank.
Yeah.
Yeah.
Is
So
it the big banks or is it the smaller banks? Or is it
I think across the board, I reckon.
across the board,
Yeah.
mainly the big ones.
mainly the big ones, yeah?
Yeah.
Why do you think they're doing it?
Well, my thoughts is that interest rates are going higher, and what other ways can you bring in customer by giving more competitive interest
Pricing.
rates? Yeah.
But
So in a way, it seems to me like the banks are absorbing some of the
so
margin.
I feel like
by
they're a bit
offering-
discriminating against the
They are.
the existing client. They don't give as much discount, but for the
Yeah.
new lending, for new client, they're giving more discount.
Look, people I always say banks are not stupid. I work for them. They are cutthroat businesses. At the end of the day, they are run by, high-profile CEOs, and they've got to make billions of dollars to keep shareholders happy.
Yep.
So they're not going to discount the back book because that's the book that is making them money. Yeah. So these are all your existing customers. You're not gonna cut yourself. So that back book you're not gonna look after. You just try to retain them. So in general, is when they start to complain and start to say, "Oh, I want to move out," then maybe they'll look at discounting the customers. But at the end of the day, is they know that interest rates are rising.
Yep.
So therefore, the market has changed because now there is an appetite from customers that want to refinance, look for a better deal.
Absolutely.
So they got to target that market by then coming out to the market with a portfolio of loan products at the discounted rate to try to bring in new customers. At the same time, trying to keep the existing ones happy as well.
So Justin, for those existing customers, what do you think you can do? How we can help them?
Something that we've been talking we've been talking about all along. Get them to sit down, review their loans, their rates, just to have a bit of a chat. That's it. Understand where you're sitting at the moment. We can't always guarantee that you're gonna get savings elsewhere.
Correct. Yeah.
Refinancing doesn't actually it's not a sure thing. Once you do that, then you're gonna save yourself thousands of dollars. We just help you to review. It's like you're coming for a medical checkup. I go for a medical checkup because I'm afraid that what if I have lung cancer because of my smoking habit? Don't know, right? So you just have to go for a checkup, go for a banking health check, have a look and see whether there's any issue. If there's any room for improvement, meaning that we can get you something that is more competitive in terms of rates or fees. You might have some other requirements that you're not aware of, that your current banking arrangement doesn't suit you
Correct. Yeah.
as well.
Yep.
Absolutely.
So therefore that will be one of the key ways for us to help out the customer to look. It doesn't actually stop interest rates from rising, but at least it mitigates the impact, so to speak.
So we also talk about this, Justin. What happens if for those homeowners, they also got, let's say, car loans or credit cards or even personal loans? What can they do? I mean, the good thing now is while interest rates are going, the property market is still quite, the valuations are still quite high. What can they do to sort of consolidate their loans?
Oh, absolutely. You did mention that the property prices have gone up quite a fair bit. Then you can consider it's definitely one of the options for you to tap into the property equity, to take out a little bit more to consolidate your high interest rate personal loan and credit cards as well. But as we mentioned previously, you just have to be mindful that in the long run, you may be paying a little bit more interest, but at least for the time being, if you think that your cash flow is a bit tight because every single month that you have to make the minimum repayment of these for your car loan, for your personal loan, for your credit card as well, and especially credit card, if you're just going to make the minimum payment, it doesn't actually feel like you ever make any progress because
Interest rates like 25% on the credit card, man,
Yeah,
or
man.
29%.
correct. So, but of course, right after consolidating all your debts, you just have to be mindful you're not going to get any new credit cards. Ooh,
Yes.
Amex,
Yes, of
ooh,
course.
David Jones or
100%.
whatever. So it's a bad habit.
That comes down to your lifestyle, your spending habits. You gotta
Yes.
be mindful of that as well.
Yes.
Basically, it's like if the customer is sitting in a very hot wok of boiling oil, we take them out, and then if they take another credit card, means they put themselves back into another wok of boiling oil.
You might as well might as well just pick up smoking.
So it's like
At least you gotta walk, hey.
double chao ta lah, double burnt.
Anyway, speaking of the debt, right? So what will be your advice for people who are already struggling and people who's already behind in making those repayments? Like, what are your thoughts? Like, what are some of the advice that you can give them?
Oh, that's a very tough situation here. So they're already behind the repayments. Yeah.
Correct. Yeah.
Justin, would you like to answer that one? Or Leonard, this is your tough question.
So
This is
I
a
mean,
tough- very tough question,
my
yeah.
advice to you guys
Yeah.
who is struggling or who is already
Yeah.
behind in their repayments, I think for you to act now rather than procrastinating and to wait, because the sooner that you speak with your lender, the sooner you speak with your mortgage broker and get good advice, I think the better off the outcome will be. Because the last thing that you want to happen is that the bank suddenly step in and sell the house. Because normally, if you do speak to them at the early stage, and if you do give them some sort of plan on what you can do, they can help you with some sort of repayment holiday or minimum repayment until you sort of get back on your feet.
If they go on a repayment holiday, Leonard, does it affect their credit file?
Not necessarily. So if you're on actual repayment holiday, it doesn't necessarily affect your credit file. The worst because you're already on a plan. But the worst thing is if you're actually making a late repayment, and that will definitely appear on your credit file and it will show it in there.
So what Leonard is suggesting is, if you're struggling, I mean, in all honesty, we hope that everyone is doing well, because it's a very tough situation if you are, But what Leonard's suggesting is, if you find yourself in a situation that you can't make your repayments on time or cash flow is so tight, do contact the bank ASAP. Make an agreement with them to defer your repayments for 3 months or 6 months. So then, as long as the bank's aware, your credit file won't be impacted. However, the worst thing you can do is just not contact the bank. Just continue to make late repayments or ignore payment reminders in which the bank has got, is not aware of it because you've not discussed it. Then it will affect your credit file. It will affect your credit score. So these days, there is what's called comprehensive credit reporting.
Correct.
And that will stay on your file for how long, Leonard?
First inquiry, I think up to, it's 24
Yes,
24
two,
months.
2 years.
2 years.
2
yeah.
years. So then, when things do recover, cash flow is a bit better, and you want to refinance, you find that you can't because your credit file has been impacted because you're carrying all the bad repayment behaviors on file for the last 2 years, and the banks can see it and they go, "Nah, sorry, we're not going to touch you." So yeah.
Correct. So act now. Yeah, don't wait.
Yeah.
Yeah, correct. Yeah. So I mean that's pretty much it from me today. I think some of the key points that we can take out from today is number one, do expect, I think the interest rate will go up further. So I guess be cautious of your spending. Anything else that you wanna add?
Not for
Some
me.
key points?
I think I've covered the key points today. Yourself?
I think the last question when you ask me and you look at me, I kind of like daydreaming a little bit. For that financial hardship bit, right? I was gonna say that just based on some of the previous experience in the bank as well, I do sense a bit of a shame from customers. There's nothing to be ashamed of. And the banks is not gonna hammer you and gonna take you down, so to speak, when you go to them with your financial, when you have a genuine financially difficult situation, that they're willing to work together with you as well. So nothing to be ashamed of at all.
Because I think the last thing that the bank want to happen is for them to do a foreclosure on your house and sell the house, because I think you're gonna cost them a lot more money because of the lawyers and all of the legal implications
Correct.
and all of that. Yeah. So I
Absolutely.
think the priority for the bank is for you to get back on track and to be able to make normal repayment on your loan.
And we work for the banks, Justin and I, previously. So if you feel that there's a stigma or you feel a bit shy to call up for hardship, believe me, they take calls, hundreds and hundreds of calls a day. You're not that special.
That's a very good point.
Yeah.
When you think your problem is unique, actually it's not unique. Yeah, you're absolutely
Yeah.
right.
I always tell Leonard that I'm a very good employer every day, but he always look at me and go, "You're not that special." Put me back in my little box.
Anyway, I think that's pretty much it from us today. Thank you so much for listening, and hopefully I will see you guys next time. Thank you.
Thanks, guys. Bye-bye.
Thank you.
Thank you.
Bye-bye.